Right. Hello, everybody. Welcome to Finance Junkies. Thanks for being here. Kris and VITALY should be joining us in a second.
I think VITALY is not going to make it today. I think he's
VITALY's not making it.
I think he's at a concert. Isn't the Guns N' Roses thing today?
Oh yeah, he's at a concert.
I think so. I was actually just reading up before we got on about the hits to the banks today.
Yeah, they got hit. Kris will be able to explain in a lot more detail. He's texting me about it today, but a lot of it's bullshit, even though some of it's warranted. But there's some
threatening downgrades, which is always which is not good, and ultimately it is bullshit. But the thing that I found the most interesting was that they were saying that they're proposing new rules that banks now have to create sort of like a living will. Did you see that?
Yeah.
I'm like really curious how that would go. Like, what happens to your assets in the event that the bank goes down? Like, I would have loved to know that for what was the one that I had my card, the BlockFi.
Yeah.
I just got my email the other day that it's possible I could actually get some of the money that I
you invested in BlockFi. Was how'd you get in there? It was public, or no? You had money in BlockFi, right?
I didn't have money in BlockFi directly, but when they announced the Bitcoin rewards card, I thought that was an absolutely genius idea. Take 2 or 3% cash back and have it buy you Bitcoin at whatever price it is. I'm like, that's a freaking genius idea. It's a way of getting exposure to Bitcoin and taking money that I'm spending already anyway and putting into Bitcoin. So I don't have too much in there, but at one point when that happened, I just switched every reoccurring bill to that. And so I was able to build up a good bit of money in there because for the first 30 days or 60 days, like they doubled the amount that they would buy. So I tried to take advantage of that as much as possible. But I was like, okay, that money's gone. It's just gone. And then I got the email the other day saying that it's possible now that you put yourself on a list, and depending on what it is, you could get the money back. I still just have a fundamental problem with that, with the way that banks work. Like, I understand that like they make money by lending out money, but I look at it as like the storage space model, right? If a storage space company goes out of business, they don't have the right to take what I've put in the storage space. You know,
right?
I just have a fundamental problem with that stewardship, the fact that they actually have access to what you're putting in the bank, you know?
Yeah, it's really interesting. I think Kevin invested like 420 grand in BlockFi, and then that one went under.
He lost it.
Yeah, he lost all of it. Bro, 2021 with crypto was just insane. I mean, we were talking off camera about how you had money, you sold a little bit at the top, but like that crypto top in 2021. I remember when Dogecoin was 70 cents. That was just insane. My sister made $1,500 off Dogecoin.
Like instant.
Like my sister, who knows nothing about fucking like it's crazy that actually.
Well, when everything is going up like that, there was a point for like weeks on end where everyone that was in crypto, everyone that had bought Bitcoin, every single person was in the positive. There was not a single person who was in the negative. Same thing when, whenever a stock passes its all-time high, right? There's nobody that's in the negative. That's the great thing about an all-time high that happened with Tesla. But what's about to happen in crypto is going to be absolutely insane.
And you think it happens this year or over the 2025, 2026-ish?
Actually, Jesse Dow had a really good chart. I think I tagged you in it, actually, about the returns. Typically, what you have is a terrible year for Bitcoin specifically. 1 year of just down, just all red all year. And then 3 subsequent years leading up to the halving event. And so right now, I think we had a 78% return this year. Between next year and the year after, it looks like we're going to have the monster returns. But at these levels that we're talking about, like, you got to understand, a 70% return, a 70% return is like 30 cents to $1. But you're talking about a 70% return of like 30,000 to 100,000. Like, it's just we're playing at much different levels now. All this money, all this extra money, all this money printing that's been happening has created more liquidity that can physically be invested. You've got a lot of the regulation and a lot of the narrative, the counter narrative to crypto is going away. They just delayed the ETF, the spot ETF. From what I read, the last thing is that they just delayed it. So they haven't said no, but they're delaying it. I think eventually they'll figure out a way to make it happen. It might not be this run, but just the fact that they continue to try, the overall narrative is changing. People are seeing, you're hearing more conversations in mainstream media about Bitcoin being a feasible investment. They're not questioning its viability anymore. They're just questioning, say, what your exposure should be. And some people are saying, it shouldn't be any more than 1%. Shouldn't be any more than 5%. Before it was, this is a drug dealer. It's the cartels are using it. It's a Ponzi scheme. And so narrative is slowly changing. Institutions are finding themselves more comfortable holding it on the balance sheet. And so I just think we're getting set for a perfect recipe. Once this, what's going to happen is really quickly, and I don't mean to make this a crypto episode, is
no, we can talk about it.
Look, as you lead up, you understand how crypto works, right? And you understand how Bitcoins are generated and how the miners make money, right? So real quick, the miners are supporting the network, verifying the transactions, and every 10 minutes, the transactions are the next block of transactions are added to the chain. That's the blockchain. The reward for doing that work is a certain amount of Bitcoin. I think right now the reward is 3 Bitcoin. I'm pretty sure right. It's 3 Bitcoin. So every 10 minutes, 3 Bitcoin are generated and they're divvied out percentage-wise, proportionally to the amount of work that the miners did to create that. Well, what's going to happen in whatever, less than 100 days or something like that, that reward's going to get cut in half. So instead of 3 Bitcoins being generated every 10 minutes, it's going to be 1.5 Bitcoin generated every 10 minutes. And so what typically happens leading up to the halving is the miners sell Bitcoin to fund their operations. That's how they make it. So every month they're selling a certain amount of Bitcoin on the market every time to take profit to continue to run their business. But knowing that the reward is going to be halved, imagine if you knew right now that I'm going to cut your salary in half in a year. And you knew this, you knew the exact day it was going to happen. Well, what people technically do is they start to hoard it. So miners are going to hoard and stop selling the Bitcoin at the 3 Bitcoin reward because they know that they're going to see higher prices once they stop selling the Bitcoin. You eliminate a lot of the sell pressure that's happening or the regular sell pressure that's in the market. So what happens to the price? The buyers
goes up,
and the price will generally go up. Miners
know how are they going to fund the mining if they don't sell?
Well, you sell now and you start to bank money just like anybody. You just be responsible with your capital, and you make sure that you have enough money to weather you when you sell less and less, because you know that by eliminating some of that sell pressure, the buyers are going to win, which will drive the prices higher. And then when you do eventually sell some of these Bitcoin that you've been holding on the side, they're going to be worth more money. But this is what starts to create that upwards momentum in Bitcoin, which I think combined with the halving event and the news of the halving always generates a sort of bull run as a result. And I think we're seeing some of the legislative pressures being eased that were a real headwind for it. And you're also seeing some of the dominance. The dominance is what's happening now. Benjamin Cowan talks a lot about the dominance. So if you take the entire crypto market, the Bitcoin dominance is how much of the entire crypto market cap is Bitcoin versus all of the other altcoins. And typically what happens is, as you start to get to these halving events and beyond, Bitcoin starts to usurp the market cap of these other companies. So what you see is like all of the what you start to see is all of the altcoins tend to drop in value as people convert it to Bitcoin. Do you understand? So like you'll convert your Ethereum to Bitcoin.
Were you buying in June when it hit 15 grand or no?
I don't think I've ever bought a Bitcoin as expensive as 15 grand.
Wow.
I think my highest, I might have DCA'd a couple because like towards the end I was DCAing more, but I think my average price for a Bitcoin is $8,000.
So we'll do this last question, then we'll get into today's topics. What price do you aim to get out?
That's a good question, Juki. I think for me, I start to scale out at 100. I think I might sell a couple at 100. It really depends on how fast it's getting there. If we start to see a run like we did at the end of 2020, where we saw it blow past the all-time high, and it was just consecutive week after week after week, heading towards that 70,000, I think I might be a little more gun shy. I might sell a little bit less, but I think a majority of my sales right now, if I can get a good amount of it out above 100,000, I think I would hold beyond 150, which I think we might be able to push just because of all of the new money that is sitting on the sidelines. I do think we might be able to push past 150. We might even see 200,000, but I don't know that I want to be around for that. What I need from Bitcoin is to essentially retire. I need to actually make that the goal. And so I got to do the math on that, because I also feel like, and I don't know how many of you guys out there also are holding Ethereum, but I feel like once Bitcoin crosses 100,000, there's no way we're going to see a 4-digit Ethereum with a 6-digit crypto Bitcoin. I just don't see it. So I think Ethereum crosses the $10,000 mark, which is also a pretty substantial position for me. And that one I would probably just liquidate. If Ethereum crossed 10,000, I think I'm gone. And that will essentially like pay my house and some other bills. And then I think it really becomes talking about retirement,
Okay. I hope that happens soon, because then you can do Finance Junkies full time. Then it'll be
Bro. If I could, let me tell you right now, if I could devote all of my time to this, and I could do some like the behind the scenes work, and we could do like,
if all of us could, that'd just be so cool.
dude, it would be insane. And at some point I would love to do that. So I do appreciate all the people that support us, because they're helping. I mean, believe it or not, they're helping by watching the ad money, the super chats. It's helping. It really is helping to at least for the sentiment, I think.
Helping who, Carlos? Helping who?
I knew
Well, it's helping somebody who starts with an A.
You know, it's funny that you mentioned that, because like last night, normally I have like a ton of just chill time where if something goes wrong, I can address it.
Yeah.
But dude, one of our data centers was down and we had all sorts of issues. We had to get Dell support to actually send engineers in to do a lot of work to our data center. And it was rough, dude. I was up till like 12 during the daytime, and I had started 12. So I was up 12 hours straight dealing with this. And literally it's just, you guys, you know, it's funny. People think that all the stuff that we're doing, not finance junkies, but like guys that work in IT. If there's anyone in the chat here that works in an IT capacity, whether you're in DevOps, whether you're in infrastructure, whether you're even in software development, bro, y'all are the unsung heroes of the modern day economy. Because without you guys and without guys like me, shit would fall apart so quick. And everyone who thinks that, oh my God, like everything is just magic would lose their mind. You know, we'd literally go back to the Stone Age. So last night we ended up going back to the Stone Age with some of the clinical applications that I support. And let me tell you, boy, it was rough. So
how did you resolve? Did you make the right phone calls? Like what exactly did you do?
So the first part is just diagnosing the issue. Finding the root cause of a problem can be very, very difficult. So a lot of times it takes like, it's like pretty much probing different things to make it work. Like first you usually do like, you go to your servers that support your client applications, you restart them, see if there's something that could be resolved. You look at event logs to see what the error may have been. And then you just literally, it's like ruling things out one at a time. And then eventually, you know, and this is where like companies like Datadog and Palo Alto Networks, they're all come into play, because what they do is they essentially let you monitor your network infrastructure. When you think about like a modern day architecture of how a company's like systems operate, like an organizations operate, especially something like a hospital system. Think of like a spider.
I figure like a massive central control, like the way that you see it on Star Trek, right? Where they have all the systems and they can talk to everybody, you know?
I mean, maybe in our EOC building, like we have like an emergency building where literally all the data kind of just flows through. So maybe there it's like that, but most of the time it's actually pretty much like dashboards. Like everyone's got a dashboard with their own corresponding things that they got to work on, and basically that they monitor, and then we just kind of just help each other. So like an example, when things go down, what happens is if anyone here works in an IT role, you'll probably agree with me. It's you open something called a bridge, where basically it's like a Zoom call or a WebEx or whatever, and then you start inviting people who are relevant to that specific section that could help you, and then each person is on there willing to assist in dealing with this. So usually there's one person that takes charge, the rest kind of just like fall in place and help out. My boss is like a fucking super genius. Like he knows like the infrastructure and our clinical applications and software like there's nobody's business. And this guy is worth every dollar that he gets. He is underpaid, in my opinion, for what the amount of like responsibility he takes on, because we're like a really big organization, and so we deal with a lot of like critical infrastructure. But this guy is really good. So he came on today at 7 a.m, took charge. I was there just as in a supporting role. So he'd be like, Kris, can you get me EOCs, you know, this specific network? You know, I would call the person, get them on the thing. And it's really high pressure, because what happened is, I'm glad you mentioned that, because what happens is you're getting users like that are actively dealing with patients, like, because I work in a hospital organization, so dealing with them calling you like, hey, I can't do this, yesterday I was able to, today I can't, what's going to happen, like, are you going to take responsibility? And it's like half the job is customer service, the other half is figuring shit out. and yeah, it's a
So you have
rough
to be a good talker. You have to know how to calm people down sometimes, right?
yeah.
Jay Schwash asks, do you use it for everything or just limited stuff like HIPAA?
No. We have two things. Like most of our client applications, they run on-prem. So we have a data center which all of our hospitals connect to, and so all of our client applications are there, and there's just a bunch of VMs, like a lot of VMs. And then we have a failover. We have something called a DR, which is disaster recovery, which is offsite, and so that's another data center that pretty much protects our data. So in case, like, let's say someone bombs our main data center where we run all of our on-prem applications, we can fail over to that specific data center and keep the operations going until we can figure out what the hell is going on here. We also have like local servers, like each hospital has its own limited capacity to be able to support some applications in case there's a connectivity loss with the main data center. So like all this stuff is all architecture, but what I can tell you is when you're investing in tech, especially big tech like cloud providers, they help with a lot of this stuff. But then there's also secondary companies that really make a big difference. I had a really good conversation with one of my Patreon people who works in DevOps yesterday, and he was telling me, he's like, yeah, man, it's not as easy as it looks. I know a lot of times we just think of this as magic. We go on YouTube, we click on this, but there's literally like an army of guys like me in the background making sure that everything works correctly. So yeah, and that's an opportunity. Why not AWS? Well, I don't know. That's a leadership question. That's not me. I'm only working local. Like I'm too low on the totem pole to be like, hey, let's put everything on AWS. We do have some client applications that run on AWS, but not everything. And I think sometimes when it comes to like healthcare, you kind of don't want to be relying on just one cloud provider, because if anything happens to a cloud provider, you have to deal with it. So like I said, it's not a decision for me. It's a decision for leadership that they have to make. So yeah.
In my former life, I used to work doing alarms and camera systems and whatnot. And I was really great at that, like really great at just getting the basic systems installed. But what became more and more of my job was the troubleshooting of it. Like you were saying, like your boss, when you are really good at, say, installing systems, you also can sort of visualize how the system is, or you visualize exactly how the system is working. And if you can identify and fix problems very quickly, it's actually probably more monetizable for you as that person than it is doing the original installs. At a certain point, I would get called in. Like I was certified on certain camera systems and alarm systems, and I would get called in. Like one of our contracts was the United States Postal Service. So we would get sent out and do all of the installations on the post offices. And if they ever had a problem, they would send me in to go fix this thing. I mean, some of these things are, 180 pan-tilt zoom cameras. Well, one of our big contracts was JFK Airport. So when they redid JFK Airport a few years back, they hired our company to do it. So I installed all the cameras there. We did all the card access controls, and then we did all of the vehicle access controls. So those magnets that you drive over with your car that detect when the car is there, that let you out, like those gates and stuff, like all of that stuff, and being able to manage the access levels of different people, times of day that they can come in, permissions, who can get access to what part of the building, and then camera systems. So if somebody's walking in an area that they shouldn't be walking in, that camera spins around, picks them up, and starts recording real time what's happening, then sends a signal to somebody else. When those systems would go down, I would get called in and I would do that. I mean, the money that you were making doing that was more than the money that you'd make actually installing it, because every minute that they're down, it's just a huge vulnerability for them. So yeah, and actually that thinking, being able to visualize a problem and understanding where the failure point was, has helped me in my investment career, because not necessarily in terms of the moves that I make in the market, but when I'm looking at a company and I'm listening to what they're saying, say on an earnings call, or when you start looking at like a macro environment with which they're operating in, you're like, but this doesn't make any sense. Precaution, right. I had a pretty good call. We were talking about some autonomous company plays, and it was a really good call, because just even within that, we were able to just identify certain things that, hey, maybe they're not telling you this on the deck for some reason, or even Kris and I, when we talk about some stuff outside, like they're not going to tell you what the problems are on the deck, but if you're smart, you can kind of read between the lines.
It's funny. Someone said if AI was to start taking over jobs, it hit engineering sector first. Bro, good luck, dude. I welcome AI to try to take my job, bro. I say, come, please. I don't want to deal with these guys. I don't want to deal with fucking users, bro. I wish I could have an automated chatbot that tells them to go fuck off myself, dude, in a polite way. I am not. If you work in tech, anyone who works in tech right now, no one is worried about AI. We know all the limitations that come around. No, AI. I would say that our job becomes easier with AI because AI can help us figure out stuff if things are going wrong, but I don't think that they can completely replace us humans. Good luck if you think that that's going to happen.
It's not that it's going to completely replace humans, but there would not be so much money being invested in AI if it didn't save companies money. And what's the best way that it's going to save them money? It's going to save them money on headcount and productivity. That's the reason why companies are investing so much.
The question is productivity where, right? A lot of it comes from this bloated decision-making infrastructure that typically exists where you have data that's siloed all over the place. Okay. So you've got finance data, you've got, operations data, you've got HR data, you got all data sitting in silos everywhere. And usually there's one or two people managing that data in their respective little kingdom, right?
Right.
The problem is when you're a CEO or whatever, you need to always be in this position where you're able to make a decision in a quicker way. And so AI, what that helps you do is just synthesize all that data into a more complete response that you can do based on, an analytical framework. And that's the same thing with me and you guys with investing. Like, think about in the 1990s, the way that you would invest is you would have to look through the fucking Wall Street Journal or the New York Times.
Pen and
You'd
paper.
look at the ticker symbols, right?
Yeah.
Now you can grab all this data all in one screen, put it on your screen, run analytics, and figure out, okay, is this company worth investing in, or whether it's not, or should I watch a YouTube video of some 25-year-old telling me that this is going to go to the moon? These are the difference. That was a shot at you, Amit.
I smiled.
No, but what I'll say is what you're talking about is level one. That's the level one use of AI. It's like, how much money are we spending on this, or how much money are we spending on downtime with employees, whatever? And it would normally take you a lot of time to find that answer so that the person can make a decision as to whether or not they should do something about that. But that becomes very quick with AI. But the level two of that, when you attach that to a large language model, is you get the benefit of what companies do by hiring companies like PwC. One of my ex-girlfriends worked for PwC, and she would go to these companies. She would interview all the employees. What do you do here? What are the biggest problems you solve? What are the pain points? Who do you like? Who do you don't like? And they would create this massive report. And they would tell the company, here's where you're wasting your money. These are the people that could get fired. These are the people that should be promoted. And this is what they should be doing. This person has time in their day to handle this, this, and this. You could consolidate these positions into this. It's recommendations. It's a recommendation engine.
Yeah, it makes your life easier at the end of the day.
Right. So when you combine an AI that has all of this data, can give you any of the statistics that you want, and like the ratios, like the stats, like you would in baseball, and then you have it understand what your goal is in the business, and then you tell it, make some recommendations. You're basically getting like a PwC level report, and that person now works in your facility.
So consulting firms are going out of business. That's the
no, I don't think so.
No, because consulting firms will just end up using AI to say
it's just going to help them. That's
but the idea is that initially AI will eliminate people, eliminate positions, in the same way that the car eliminated certain jobs that were revolving around a predominantly horse-driven economy. And then once that, it's like what do they call that? The valley of death in terms of adaptation. Eventually, people are going to have to figure out something else to do, and it will create new businesses. But initially, it's going to eliminate people, and the jobs that it replaces will be fewer and I think higher paid.
I think
Kris, last word on this, then we got to get to the banks. Go ahead.
I think it's more about productivity boost, right? Like anytime new technology comes, everyone thinks it's deflationary because people lose their jobs. I think it's more that with the same amount of people, you'll be able to do way more. Like imagine our economy 23 years ago, prior to the internet, you still needed so many people to do one task. Now the productivity boost is infinite. Like if you think about just Google search, right? Back in the day, if you wanted to get information, you had to freaking go to the library. You had to sit there. You had to, do all this stuff just to get one piece of information. Now it's literally just Google, and then it gives you the answer. So that amount of productivity boost is super deflationary. But that happens with technology. Anytime technology comes in that can help reduce the amount of effort that it takes in order to be productive, you're going to see those benefits end up coming to the economy. And usually that causes a deflationary cycle to happen. So it's just the amount of productivity goes up, the cost of that productivity goes down, and thus you get a healthy, vibrant economy, which if China fucking knew anything, they wouldn't have prosecuted their tech sector and screwed their economy over.
Save the China stuff, because we'll talk about the China stuff.
All I can say to close it out is that in my business, on the content creation side, it is going to severely cut jobs. It's going to make, yes, it'll make people more productive, but it is going to cut jobs and cut salaries and cut length of bookings. There's going to be a bloodbath, I think, coming in the entertainment industry, I think.
All right, so moving on to
on that happy note,
the biggest news of the day. Fitch, this thing I thought we were done with a week ago, it has come back. It is warned it may be forced to downgrade dozens of banks, up to 70 of them, including the granddaddy of them all, JP Morgan Chase. You might be thinking, how could this happen? How could they be downgraded JP Morgan Chase? Their argument is that the banks are in a bad situation. And as a result of that, we saw the regional banking ETF take a massive dump today, down 3%. TFC went below 30, KeyBank, Zions, all these stocks were down, and they didn't really recover throughout the day. I mean, there was a little bit of recovery, but then they just fell back again. So here's the question for everyone. Obviously, US banks hold a ton of confidence and support and infrastructure and significance to the overall US economy. Fitch downgrading US banks, 70 of them, is not good for the entire US economy. That's why we saw stocks all go down today. Does this matter? Do they have a reason to downgrade these banks? Are they doing it for political reasons? Or is this like this weird headline that they're putting it out there that says, we're going to downgrade you, but it really doesn't matter because you guys are the biggest banks in the world. So nothing's going to happen as a result of it over the long term.
Someone's late to the party. That's the problem. Someone's late to the party. They're using old data to make assessments today. They released their report. You ever ask yourself, man, these guys seem to always figure out that the shit has hit the fan after it's hit the fan, and then 6 months
after they got their returns.
You know, it's just the funniest thing. Like, remember 2008? Oh, the banks are all great, and then a year later, whoa, I think there's a problem. Yeah, motherfucker, we saw the market drop. You know, like, so all these companies, I'm telling you, some of them, you just, the amount of I want to say stupidity, the amount of, like, I don't even know what to call it, but it's like you're downgrading the US after they just jacked up $30 trillion of debt. Like, what the hell were y'all doing for the last 20 years when they were blowing through their fiscal budgets? You know, like, you didn't think at the time, like, hey, I think the US is maybe not doing so well politically. They didn't even downgrade us after January 6th when there was a fucking uprising. So y'all are doing this, what, 2 years later? So I have a hard time believing that these guys are any way credible. And the fact that they're trying to downgrade JP Morgan, which is probably the most conservative of the banks out there and the largest by assets, is a little bit just like, hey, what the hell are you guys doing?
What do you think gives them the ball? What do you think gives them the balls to actually put that out there? Like, and have people take it seriously for JP.
They don't want to look stupid. If something happens, they don't want to look stupid. So, I mean, it's easier for them to re-rate higher than it is to say, hey, we missed it. Like, because they clearly missed it. They should have been downgrading these banks last year, saying, look, they're overexposed to credit risk and duration risk, right? If they're really doing their jobs, they would have downgraded Silicon Valley Bank. They would have downgraded First Republic the minute that the Fed started raising interest rates, and they were the ones watching them. What happened? How come you didn't downgrade them at the time, saying, hey, interest rates are rising, these guys are not protected? How come it took a bunch of Twitter people like myself to point that out to people, saying, hey, look at their balance sheet. 1 and 1 doesn't make sense. So yeah, congratulations for figuring shit out 6 months too late. I think this is a great opportunity to buy some really great banks at cheap prices. I know the hedge funds are probably doing the same exact thing. We're a bunch of guys like me, we're a bunch of vultures, okay? We're waiting to pick at the corpse. That's why I sold out of my TFC position when I spoke to you guys about it. And now
I gotta give Kris props today. He sold his TFC option spread at around $6. It has come down today, given TFC went below 30 at around $3.85, which is the average Kris and I kind of got in. So yeah, it was a good fucking trade. And now he can get back in if he wants, or even get back in lower.
I'm waiting now for the market to finally start bottoming, and then fuck it, I'll reload and go on and move past it. This is always the case, man. You're going to see rises, and then and then falls, and then the euphoria starts to kick in. Everyone goes up, and it's just the market dynamics. But I can say without a doubt that fundamentally there is nothing wrong with the regional banks right now. A lot of this is just headlines, and that's perfect because I want people to be scared, so they sell me their shares on the cheap, right? So I'm patiently waiting right now. I'm not deploying a lot of capital. For my Patreon followers, I've been telling them for a month, just chill, sit on the cash, don't buy too much stuff. Like I have a 30 to 40% of my portfolio right now is just sitting in cash, waiting to pick stuff up on the cheap. So hopefully we do that.
I feel like every year they come up with a different reason to justify the natural rotation from tech to value, and now from value to growth stocks again. I feel like as we're getting close to the end of the summer, we start automatically seeing some of this money start to rotate back in. We've like you said, frothy. We were real frothy for a while, and so money's going to start to come out of this. Yeah, there might be some of these catalysts, like you said, but if they're backwards looking, it's just justifying something that happens every year anyway. What year has this not happened with banks? Seriously.
This is also, speaking of historical stuff, August, every third year of an election cycle, historically, this is exactly what happens. Like it literally down to the percentage we're down currently in August, every third year of the election cycle, which is 2023, it happens. And so I think, August, September, as a bunch of people have been saying, it's going to be choppy, and then we should see some momentum. But August and September are just not fun months for the market ever.
Well, what elections do we have coming up November?
Well, no, I mean 2020. So the third year of an election cycle. So 2024.
Right, but we had congressional ones last year. I don't think there's any major. There's always an election, but I don't know if it's anything major.
There might be some mayor, some gubernatorial. I'm saying that.
But some of those might be coming up. But yeah, typically I feel like what you do is you create sort of an artificial bottom to allow the economy to run up in the months before an election, because typically you want the economy. The incumbent president wants the economy doing well going into election. It's just never good because. Who said that famously? It's the economy, stupid. Like literally, just make sure everyone's got money in their pocket and people are feeling good, and it's a great tailwind for you.
Yeah, unfortunately, I think the saying fundamentals don't matter, that needs to die. Fundamentals always matter. It's just the time frame which you're analyzing those fundamentals, right? So when markets are overvalued, you want to look for the fundamental companies that are good, but you don't want to buy them. You want to just wait. And then on the other hand, when things are undervalued, but the fundamentals are still good, that's when you should be buying, right? Never buy stuff for more than what it's supposed to actually be worth, or at least try not to. I can't say that I don't buy overvalued shit, because I do. Like if I see crazy potential for a company to grow their business, I throw away fundamentals and just say, you know what? I think the fucking product is amazing. And that's the mistake that I learned as an investor after a lot of time. Like as an example, if you looked at the fundamentals of Tesla, you would have said this is uninvestable, which is what I did. I never invested in Tesla. But then when you look at the product, it's like, wow, it's a fucking great product. Eventually they'll figure out how to make the fundamentals work for the product, and boom, you've got yourself a great business. So I think, when you're investing, you have to look at both things. You can't be as rigid as everyone. Either you're like 100%, I'm all going to be value based only, and I'm only going to go based on value, because otherwise you'll miss out on a lot of growth opportunities. And you can't be all growth and invest in the future, but forget that sometimes the market will come after you and they'll take your company down. So right now, if you look at my portfolio, it's balanced towards growth with franchises like Wingstop. I know that sounds stupid, but trust me, they're growing.
Oh, you're in? Crazy. You're already in? You're in the company?
Yeah, I have a little bit of Wingstop, but I'm slowly adding to the position. Same thing with Google. Google, I think a lot of people think is Google is actually one of the best investments that anyone could make right now. The reason why is because they are a growth name with a valuation, which is unheard of. That's usually not the case. In terms of like relative to their peers, their value right now. So if there was one company that I would say that it's a buy, no matter like what the economy is doing, up, down, left, right, is Google. And you can see it's holding its levels pretty solid right now. So yeah.
Let's transition into China, because Cathie had some really interesting thoughts today, and you can then talk about what you were going to say, Kris, on China. So just to read real quickly, Cathie says China is exporting deflation in a more profound way than I believe many economists appreciate. All else equal, the 15% depreciation of the yuan relative to the dollar last year should have increased its PPI inflation rate by 15%. Instead, it has dropped by 4%. In other words, the deflationary vortex emanating from China thank you, is approaching 20%, highlighted by the burgeoning defaults in Chinese real estate and trust companies. After entering the World Trade Organization in 2001, China's real GDP grew at double-digit rate for nearly 20 years. Rapid growth can cover many economic sins, typically excessive debt and associated leverage. Those excesses are surfacing in China now. Its stock market itself has kind of given up gains or been flat over the past decade, I was hearing today. China probably wants to limit, if not stop, the depreciation in the yuan. To do so, it would be selling US dollars and buying the yuan, effectively tightening its monetary policy and exacerbating the economy's weakness, even as it is easing. Elon says, interesting underneath. She says, in our view, the Fed has precipitated and exacerbated the risk of a global deflationary bust. The impact of its record-breaking 22-fold increase in the Fed funds rate could be hitting China first and spreading to the rest of this world. This also comes at a time where American investors are very afraid to invest in China, given some of the stuff they have done with Alibaba and Jack Ma, and basically not having a less than expected enthusiastic reopening of their economy ever since the COVID lockdown. Kris, quick thoughts on what's going on in China. Does Cathie have a point about deflation?
To be fair, I haven't necessarily done a lot of research on like the day-to-day events, what are going on in China, because I've just been so busy researching our own stuff. But to be fair, China's going through this transition period of an authoritarian based economy and somehow trying to make capitalism work at the same time. And usually those
like
two
fiscal,
things are
right? It's like a fiscal capitalism with a
and
authoritarian communism.
The problem is they're both ideas are antithetical to each other, right? Where authoritarianism means that you have to do things in a certain way. So like the Chinese economy is based on targets. Like the government tells you what rate you're going to grow at. So they're saying, no, you are going to be 10%. And you have to figure out how to grow at it 10%. So a lot of regional provinces and stuff, they'll overinvest in certain industries because they're like, oh, we need to hit this growth target. Otherwise, my boss is going to be mad, right? And instead, capitalism works a little bit differently in that, hey, there's an incentive out there for you to produce higher, right? But it's not forced upon you. So the best product will essentially win. So right now, the Chinese government has this way of picking companies to win or lose based on their own political connections, and that's not typically a great way to do innovation. So I don't know. I mean, I think China's still an innovative company. I think their economy is still not as bad as people think, but in terms of like the past growth, I think they're past that. They've got a lot of demographic issues coming down the pipeline with a lot of their policies around the one-child policy that was done decades ago, but finally is starting to make its way into the general economy. And yeah, I think China's got a lot of challenges ahead. And instead of a leadership that's willing to adapt, they've got a leader who's more concerned about stability rather than the other aspects of growing. So, I think one of those things that I would not personally do right now is invest in too many Chinese assets.
I was watching some videos with a former Chinese diplomat. This is like high level, like macro stuff, who dealt with China on a daily basis. And what he was saying was, from his intel from the people on the ground, is that the people around Xi don't actually even give him the correct information because they're afraid of getting killed. I mean, literally, if you give them the wrong information and you're the messenger of that news, hey, this is what's really happening. They find a way of disappearing you and your family and whatnot. So people either don't. What they do is, it's not even. And the thing is, they can't be caught out there for lying, right? So what they do is just eliminate all of the systems that actually get the correct data, so that they can plead plausible deniability. Because to say that you knew and didn't report it is punishable, but to say we just don't have the data is something different, because they are actually telling the truth. So a lot of the information about how China's actually working apparently doesn't even get to him. And then to your point, like you said, they have these growth targets that are unrealistic and have to be hit. And that incentivizes companies to do increasingly nefarious things in order to reach those targets, because they're literally trying to, yeah, you look great today. The country's doing great. The other problem is, there has to be a price to pay when you decide to be the world's manufacturer. And you decide to, and in a communist system where you don't create entrepreneurs, but you create people that basically just manufacture and copy. And what happened with the COVID lockdowns is so many companies were so dependent on China, and I don't know what China thought like companies like Apple or other of like the mega tech companies were going to do. They just immediately started looking elsewhere. And I think what's happened as a result of that is that these companies are realizing they don't necessarily need China to be the manufacturer of the world, and other places have stepped up, whether it's Vietnam or even India. And I don't think that business is ever going to go back, because to have their supply chains diversified is better for them. And I think it's going to be harder, or what China needs to offer to get to grow in that capacity is a different thing than what they've been offering as of now, right? Because it makes sense for Apple to diversify and get some of their supply chain into other countries.
Yeah, and this is not a unique problem to China. It happens to some companies here in the United States also. So this one thing, like I mentioned yesterday, is worth a quick listen to, because I think it really does explain one of China's bigger problems and how that could actually be cured.
When we first started this, remember I told you that within a couple of days, the forecast was we were going to lose $17 billion. So I started the business plan review. The charts are flowing, 320 charts. We even have them color coded: red, yellow, green. Any change on the chart is in blue. So there's lots that doesn't change. All you're looking for is what has changed. You don't want to hear a long explanation about what's going on. What you want is that everybody knows the plan. Everybody knows the areas need special attention. So the color, you got the charts going, and it was about 3 or 4 weeks. The data's flowing, and all the charts are green. And I stopped them and I said, you guys, we're going to lose $17 billion. Is there anything that's not going well here? Eye contact goes to the floor. Nobody says anything. Now, remember that culture you asked about. It wasn't okay to bring things up. I mean, it was command and control. People disappeared. So I think another week went by and they were green. And of course, they got me. They got this new leader. What's this leader going to do? And so the next 2 weeks later, Mark Fields, who's the leader of all the Americas business, Canada, the United States, and South America, had an Edge launch in Oakville, Canada. And they had an actuator issue on the tailgate. So he stopped production because we're going to be best in class. We're not going to deliver one vehicle unless it's done. And it's the best in quality. So he had like 2,000 or 3,000 edges, sitting out on the tundra. Thank God it was cold, so they weren't sinking in. Because when you stop production, I mean, it's a big deal. And so up comes his chart for the launch of this new edge, and it's bright red. And I mean, it got so quiet. You know what they're all thinking? It's over. Mark's gone. Gone. He's out of here. And then what's this new guy going to do? So I started to clap. Now they knew that was a sign. The door was going to open. Somebody's going to come in. Mark's out of here. I could just feel it. I mean, and I said, Mark, is there anything that we can do to help you with that? And before Mark could say one word, Benny Fowler, who is the head of quality now worldwide, said, Mark, I think I've seen that issue on a launch that we did 6 months ago. Because, in the car business, you have so much product coming out. I mean, it's what's so exciting. And then Joe Hendricks, at the time, he's the leader of all Asia Pacific now, was the head of manufacturing. He said, you're going to need some manufacturing engineers, because as soon as you find that problem and fix it, you're going to have to change all those vehicles and get the production going again. I'll have our dynamite talent up in Canada immediately. And then Derek Kuzak, who leads product development worldwide, says, Mark, I've seen that technical issue on such and such 5 years ago or something. I'll get right on that. That exchange took 12 seconds. 12 seconds. We went on to the next chart. Of course, it was green. One of the next chart, it's green. The next week, I think it was still red, Mark's chart. Everything else was green. Next week, I think he changed it to yellow because they found a solution and now they're implementing it. I think the next week it turned to green. And boom, all the vehicles started going. And then probably one of the most exciting days of my life, both from a oh shit. I mean, this is a terrible situation. Sorry. I'm so sorry. To my gosh, we're going to make it, was the following week. Guess what the charts look like? They look like a rainbow. Like a rainbow. And I'm going, oh my goodness. Now the data says right here why we're losing $17 billion.
You're muted.
And I think that's one of the keys to like American exceptionalism when it comes to like having good leaders like this, willing to let people speak up and actually implement good ideas, so that's the thing with China too, in my opinion, where I think right now they have a leadership at the top basically saying, tell me what I want to hear, otherwise I'll chop your head off. And basically everyone's just like, yeah, Mr. G, you're great. You're great. Everything's
Some of the
A-okay.
comments like,
do you think the deflation worry is going to impact Jerome Powell from not raising rates at all? Because if he continues to raise rates, that only worsens China's situation. Or
Jerome Powell could give two shits about China,
Yeah,
dude.
he
He cares about the US. That's his job.
a lot of our manufacturing's in China still. I mean, you would imagine he cares a little bit about it.
I mean, dude, if it's a weaker one, that's good for us. That means that when we manufacture shit over there, it's cheaper for us here. I mean, what's the problem?
If China like were to collapse as the world's manufacturer, as long as we have access to the raw materials, they'll find another place to build it.
There's plenty of third world countries out there willing.
They'll find another place to they'll find another place to build it. I mean, Jed Luke 447. China's problem is aging population, slowing GDP, and $3 trillion real estate problem. But on the lookout to what happens with Japan and how the treasury. Be on the lookout for what happens to the treasury. I'm sorry, to Japan and how their treasury handles the yen against strong USD. I couldn't agree more. Part of the problem with investing in China is even the information, we were talking about this earlier in the chat, even the information that we're getting is bullshit. Like they just stopped reporting like the youth
unemployment. Yeah.
So we're
like
not even
20%
getting
now.
So if you go back to the fact that Xi is not actually getting the information, they've removed the system in place to actually get the correct information, and then they are an authoritarian regime that essentially lies to people. It's literally gambling to invest in China, I believe, because there's just, what metric do you have as an American investor over here to know really what's happening in that country? But the things that we do know when it comes to like an aging population, their debt, and a housing crisis, like the things that we do know, none of those are actually good.
Yeah.
And then when you see the other things like what happened with what they did to some of the tech companies and the tech CEOs, I just don't see how you think you're actually going to get a return. You know?
Yeah. This is why when people get excited for Baba, I'm like, yo, you can get as excited as you want about the fundamentals. It's still China. All right, let's transition to this one. Or Kris, last word, then we'll transition.
Yeah, no, I was just gonna say, and this is where I like the Everything Money guys, like when they do their presentations with their target,
their eight-point
eight
plan,
pillars.
or eight pillar plan.
Yeah, I like that. The problem is when you look at it too rigidly, like you're almost dogmatic with it, where you're trying to figure out what's going to happen in the future without really looking deeply at the country. I mean, the company and how it's being involved politically. You can make a big mistake. Like these guys were saying, Baba was great at almost like 300, then 200, then 150, and the entire time it was writing on the wall that was just saying, guys, they just disappeared, Jack Ma. You know, like,
how do you
trust
not?
me, that's not.
But that doesn't fit in the thing is that doesn't fit in a spreadsheet. It's not a line item that they can fit. I've had this conversation with Steven the couple times that he's been on Steve, and when we had our conversations about Tesla, it's like, to your point, yes, on paper, it may look like, the company's overvalued and they have to grow into that valuation. But we do have examples of companies where the market has allowed them to trade at a much higher multiple than what they should on paper, because the market sees things that are outside of what you can document in a spreadsheet. And as long as they continue to hit those numbers, sentiment has a lot to do with it. Sentiment around the CEO, sentiment around the industry. Are there other industries that are doing well? Like there are, rising tide lifts all boats. So are there other industries that are doing well or will have the potential of lifting this industry that aren't necessarily through the work of themselves? All of these things have to be taken into account. And then at the end of the day, investors are emotional. I mean, investors are emotional. They do respond emotionally to things, both on the upside and the downside. Otherwise, FOMO wouldn't be a thing. right? FOMO wouldn't be a thing on like, elevator on the way up. It's whatever, elevator on the way down or escalator on the way up.
When Munger and I think Monish Pabrai sold out of their Baba, the look on their faces was the same when Cathie would sold out of Palantir for me. I was just like so upset, but like they still went down with the ship, even though Munger was like, fuck this, I'm out of here. Everything Money was like, nope. We're on Alibaba.
People are emotional and they like to pretend, and that's what it comes down to. I think all of us with their 8 pillars or whatnot, they want to try to find some way of guarantees. They want to say, look at all these numbers. I have this computer chart that said it's an 80% chance you're going to get this return, and it's great, and that's what gives them confidence. Doesn't always work that way.
I do, however,
literally everything we've been saying in the chart, everything we've been saying on this podcast, no matter what, there's always someone like Tata. Amen, Carlos. We can apply this to Palantir. Everything you say positive about any investment,
dude, this is a Palantir channel, man.
It's
Finance
fucking
Junkies Finance Junkies is like a subsidiary of the Palantir Amit channel.
This is why we need our own Finance Junkies channel, which will be happening September 3rd. By the way, everybody, link is in the description to follow, because like we'll actually get a diversified viewpoint on that channel. On this channel, you've got 90% of people that fuck.
Wait, you think? Okay, well, how many people we have? 440. We had like say 300 people. You think that a majority of this audience is watching just to hear stuff on Palantir? We don't.
No. I'm just saying they're bullish towards Palantir. That's all I mean.
In the chat, just like raise your hand if you're bullish on Palantir, or the thumbs up if you're bullish on
Come on,
Palantir.
Thumbs
up if you're bullish on Palantir.
This is when I need you.
Thumbs down if you're either
At the
neutral
Shire.
or
This
don't care.
is the time to step the fuck up. Do not put no bullshit. I'm here for Tesla or TFC. We know why we're here.
I'm just saying, look, we got to know someone's here for me. Johnny's here for me. Thank you, Johnny. Oh, no, Johnny's not here for me.
We got a SoFi. We got 12,000 shares of Palantir. Raphael.
Damn,
okay, while you're doing that,
damn.
we got a deal. Look, there we go. Kelly's part of the squad.
Kelly's
Rajan. Yo, when Kris was doing his IT story, everyone was like, bro, Palantir could have solved this, even though that's probably
exactly
not true.
They're like,
even though that's probably not true.
If your
just
company
like Kris,
just used Palantir,
you should have requested Palantir.
I'm like,
no,
yeah,
Palantir could not have solved the problem. No,
Palantir solved every problem.
Kris,
like,
all you needed was ontology, and all that shit you were complaining about would have been resolved.
My
Then
mom
here's-
fell
because
down yesterday.
Palantir was going to come and replace some fucking racks. No,
It's the beard, bro. That's the milestone.
I love it. Yeah, see, we're here for
Yeah,
here for the Palantir. Kris and Carlos are icing on the cake. Yo, it's kind of crazy. Let me just acknowledge what we have done in content is very difficult to do. This is a Palantir channel. I've obviously stopped making videos about all other stocks because I just don't care about them. I care about Palantir. I hyper focus the channel. But somehow we have carved out a lane with Finance Junkies to get 600, 400 people every night to be interested.
Yes.
When we don't talk about that's special, bro. That's hard to do. So that's credit to you guys. You guys really, you and VITALY as well, figured that out.
Also, what I will say is I think there's a lot of people that were bullish on Palantir that just got into Palantir. We're like, fuck Palantir, everything else. But it kind of it's the gateway drug to investing. You're like, SoFi is the Palantir of the banking space, and like Tesla's the Palantir of the EV space, or Enphase. Yeah, Heinz Ketchup. We open you up to Enfas.
That's the one thing I'll always be grateful for Palantir. Palantir created enough attention on this channel to at least get people into Finance Junkies, and now hopefully we can build that on its own. But I think people appreciate the
Oh my God, revolution! Well. I don't believe in Palantir. I don't even want to get into it. No matter what I say, I actually am holding shares. I'm still holding my 104 shares. I'm going up or down in the ship with Amit wherever it goes. As long as
Jed, I'm happy. So Jed is a member of Kris's Patreon. I'm happy you sold your calls. He was holding on to $10 leaps and $5 leaps, I think, or some crazy. He was up a lot on that.
Return?
Well, yeah, the return is great, but when he was on Kris's Patreon call, he's like, "Yeah, I haven't sold yet." Even I was like, "Motherfucker, you better sell that shit. $10 leaps. You better get rid of that." Like,
right. Well, there's also theta decay. I mean, this is something like even with some of the leaps that I have on like Novix and I have on SoFi, like you see some of that theta decay as you start to eat into the premium that you paid for the time on the contract. So it's a delicate balance there. I think anywhere after like a 80, 90, 100% return, what do you unless it's
look at that.
What are you holding on for?
That's perfect. He sold almost right at the top, $18.
There you go.
Not bad. Or $20, not bad. Okay, last topic for the day. Is this stock dead, and were we dead wrong on it? PayPal. VATS down 6% today. Any thoughts on?
No,
if
man,
people-
I think it's still a good company. They're
calm
doing
before the
well.
storm.
They got share buybacks coming in. I wouldn't worry. It's just gonna take time. I think right now they got caught up in the banking sector, you know, because they're adjacent, they're financial sector adjacent. So they got sold off. They got a new CEO. I want to see what the new CEO is all about. Research that a little bit. Yeah, and we'll see where things go.
Kelly bought more PayPal. Persian Prince bought PayPal. Brian. A lot of people on Twitter. I put up a tweet today saying, "Is PayPal Meta at 88?" And I think the overwhelming majority said no. It's not even a good value play right now. I mean, there were some good counter arguments as well, but I think FinTwit is bearish, which is good because people said Meta was going to $30. It was the next AOL at $88. Someone was like, "There's not enough users." I was like, "There's 431 million fucking people that use PayPal. What do you mean there's not enough users?"
It's
I mean,
just,
like,
but it's just so much easier to copy what PayPal does if you think about it.
yeah, that's true. That's true.
Like it's
I mean,
impossible to create any sort of moat. So a lot of it is sentiment and what people are used to, right? If someone's got PayPal for business, then it becomes harder to switch all of that over because it's just good to have your data all in one place, you know.
Yeah, we got a bunch of people saying it's definitely not Meta. Amir did a really good analysis on it numerically, and he said it would have to grow at 0% the next few years for it to be worth $60. So, I mean, if it grows at 0%, then sure, it's not going to happen.
Well, that's why you get call options.
Yeah, a lot of people have leaps.
That's why you get
lot
call,
of people
that's why
have
you get
leaps.
call options on it. Just let
I
them
think
sit there for a
what
while.
Tanner said is right. People didn't know Meta at 88 was Meta at 88 like they do today. That's absolutely
Yeah.
right. That's exactly what it is.
That's a good point.
It is so hard to buy the dip. Like even me, and I was bullish on Meta at 300, right? And I took a loss on Meta when it dropped to 240. I should have been buying the fuck out of it like Kris at 88. But even and I'm a more novice investor, I got up in the crowd psychology and I didn't do it. I don't know if PayPal is the 300% return that Meta is at 88, but it's really fucking hard to buy.
Well,
like
how far is it off its all-time high? PayPal, 86%.
PayPal was 321 and it's at 60.
Then that's a massive upside. And it's not to say it's going to get there, but that's still
even $100 is amazing right now. But it's hard to buy it right now, just like Meta. Even though it was a fucking no-brainer, it's hard to buy it when everything goes down.
I don't think so. I mean, I don't think so. It's actually it is easier to buy it, but how much of your portfolio is still in cash? What are you earmarking that money for? What are your own like financial needs coming up in the next?
But you're speaking logically. I'm talking about in general. Most people are scared to buy something. That's down.
Okay. So let's use the same framework that we did when it came to Meta to figure out whether or not PayPal is in the same boat, right? Let's just take one step back and just quickly analyze it. The reason why Meta went down to $88 was there wasn't anything wrong fundamentally with the business. They were just overspending on the metaverse, right? So that was clear as day to anyone. So their operating cash flow was starting to go down significantly as they were spending more on CapEx to build out their infrastructure for the metaverse and taking a loss on every VR headset they were selling. It was making the stock look absolutely terrible. On top of it, they had hired a shit ton of people for future growth that wasn't necessarily there at the time, right? So you had a lot of bloat at the company. So one of the things that we saw was the CFO at the time and the CTO both said, look, we were working on a project. And one of the things that we realized is that we had 30 people in the room, but only 2 of them really were important. Everyone else was just there as a busybody. So Zuckerberg at the time made some conscious decision to start chopping away at the people that are useless. And that's what happens with a lot of companies. They get a measure of success, they overhire, they overpromise things, and then boom, there's a correlation that once they start reducing that down and they start implementing policies that are more shareholder friendly, things eventually recover. PayPal is in kind of the same boat where that run up was primarily around COVID. So they hired a ton of people, right? Oh, and one last thing, when we take one step back with Meta, everyone was also worried that TikTok was going to come in and eat their lunch, right? And saying, oh, the future is not Meta, it's not Instagram, it's TikTok. And so everyone, what were they doing? They were selling Meta, thinking that TikTok is just going to come in and steamroll these guys, when clearly that wasn't the case. Meta's got 3 billion people. Legislatively, there's a lot of benefits to Meta versus TikTok, which is a Chinese app, X, Y, and Z. And so Meta was able to recover pretty quickly after TikTok growth started to slow down. Right now, PayPal is being sold off for 2 reasons. Number one, their business is slowing down, but slowing down compared to a very, very good growth rate over the last 5-6 years. So they're transitioning from a heavy growth to more value. So that's where one thing. So they are a profitable company. This
Share
company's
real
not
quick.
going bankrupt anytime soon. Sorry,
While,
go ahead.
while Kris is talking, just share the screen. We'll just put some stuff.
So that's one thing right there. The other thing is everyone is worried about competition from Cash App, from what is that thing called? From Fed Now, the new thing that's coming out.
Yeah.
Then some people are worried about Zelle, like that's somehow going to be competing with them. So a lot of people have taken the idea that competition is coming and that's somehow going to destroy their business. And that's where I think the key is for Meta. I mean, for PayPal in this new CEO when they come in. How are they going to return PayPal back to its growthiness, but also do it in an operational way and at the same time be very shareholder friendly? I think they're already taking the right steps by doing a $5 billion share buyback, right, plan that they have. So if you look at it on an earnings basis, that's huge boost for them going forward. So their PEs looks amazing right now with the forward PE looking even better. So this has gone from growth to value. And so right now is not a bad time to be buying this company.
So the way Zuck did the share buybacks and cut employees, you think that's what PayPal has to do?
It's already doing that. They announced it already. They're cutting 2% of their total, I think their total employee headcount. I think they're almost reducing it by a few.
Yeah, the Kamala Harris slip there. He's like, we're cutting the 2% of the world population.
Yeah. Yeah. And
you heard that? He was like, oh,
yeah, we heard that.
I heard you, Kris. The other thing to consider is that it has been accumulating in this sort of small 40% range for 488 days. And so for over a year, the price of PayPal has remained between $105 and $60, and it's come down a lot off of its all-time highs. But typically, when you get into this position, like basically everyone's got the same cost basis. Let's be honest, you're roughly around the same. Like this is a heavy accumulation. This is a long time to be trading in this relatively small window, especially having come down so much off the all-time highs. And it was also trading in this range for almost 1,000 days prior to this. So we had this slight run up and now it's trading basically back at the same levels. I think this to me tells me
this $5 billion they have to spend this year for 2023 on the buyback. I didn't know it has to.
Did they announce that?
This year. I mean, they announced the buyback. I don't know it has to be done this year. I think he's right on that. It does have to be done this year.
I mean, that's good.
The case.
It's 65 billion market cap, so it's not like it's not going to do that much. It's not like it's a $10 billion company, you know.
Yeah,
I mean, dude, 5 billion is almost 10% of their total float. Just think about that. 10%, right? 5 billion out of 65 billion.
What's the insider activity like?
No selling at all for the past almost a year.
No one's selling. I mean, that's a good
zero
sign.
selling.
That's not always an indication, but that's a good sign too.
So Tanner says they're already 3.1 billion into that 5. So they got 2 billion left to spend, 1.9 billion left.
Yeah, and the thing is, remember, they're generating cash flow, guys. That means that they can authorize this again for next year, and which more than likely they're going to do. You know, so I like I said, this is not something that I would be overly concerned about. The only thing that I would be concerned with PayPal is in terms of time frame, because big companies, they don't turn around as fast as Meta did. Like even me, that Meta blew past my assumptions for a recovery way beyond what I was thinking that they were going to recover at. Like to think that they were going to get back to 300 within like 6 months was not on my bingo card, no matter how intelligent I think I am. Like not the case. And I think with PayPal, it's going to be a slower trudge higher. So just keep that in mind. And, you know, just don't try to time this by buying calls too close to expiration, right. In which case you're expecting a massive turnaround like Meta in 6 months. I don't think we're there. You're going to have to buy really, really out of the money kind of calls to give this an opportunity to really transform itself. So, yeah, if it was me adding to this position, number one, I'm not adding to my PayPal spreads. What I am doing, on the other hand, is waiting until probably November for September, the 2026 leaps come out. So I'm going to let them come out, give it about 30 to 60 days where finally, you know, the buying and selling, the bid and ask is not too crazy and the volume is there, and then buy some leaps for 2026 January and just chill and just let the new CEO do his thing. And hopefully it works out well.
I got a jet, guys, but also just wanted to let you guys know tomorrow we are going to have Ondrej. Is that how you say his name? Ondrej. Ondrej is going to be on the show. I don't think he does very many podcasts. He said he was kind of nervous about getting on, but I'm curious if you guys don't follow him, you should. He's a cool guy, funny personality on Twitter. We're going to be talking a little bit about just general portfolio building. Obviously, we're going to talk some individual stocks, but it's more about strategy. If you're not following him, you should. He's a good dude, and so I'm looking forward to having a conversation with him tomorrow.
Yeah, people in Palantir should know him. He doesn't put out a ton of YouTube videos, but he's been in the community for a long time.
Jar makes me laugh.
Yeah,
so
this
yeah,
is awesome.
We're gonna get into it. It'll be a lot of fun, and yeah, thanks everybody. Oh, Chris.
Oh, I removed Chris by accident.
Damn.
I was gonna remove your post.
Anyway, we'll see you guys tomorrow. Any final words?
Chris, final words. What are your final words? Oh, I've been doing word of the day every day on my morning stream. I should tell you guys what the word of the day is on Finance Junkies. The word of the day was eschew. Like to eschew. ESCHEUW. Eschew. It means like hachu. Like it means to avoid, kind of. I think that's what it means. So I was like, I hope we eschew a red market, something like that. That's what I said.
I'd say be patient. Like advice I could give to most people: be patient. You don't need to be in the market all the time. Right now I know that some people's portfolios there's like a sea of red. Don't worry, just chill right now. Right now is not the time to be panicking. If you have a cash position, sit on your cash position. Don't try to bottom feed. And last but not least, anything that you have, just pile that shit up. Wait, generate the cash. Build up a cash position, because at the end of this, because eventually all these things have an end, there's going to be a lot of great deals, and then you're going to be able to buy them up, and you're going to do exceptionally well when things start to recover going into the end of this year and possibly into 2024. So right now, I wouldn't be necessarily a buyer in this market, but I wouldn't be a seller either and just panic sell everything. So
I think that I relate to that a lot. I am not I'm resisting the urge to continue to buy into this market. I'm giving my thesis time to play out. And my thesis is that the best deals that we're going to get, I think overall, are going to be somewhere in September. That is I've been feeling that. I've been feeling like we are on a downtrend. We're falling now, and we might see some pops here and there, but I think the overall trend sentiment is changing. The greed index is coming down. And as soon as we're out of any of this greed index, I think we see not a capitulation, but we see the actual bottoming of this. And I think somewhere in mid-September, there's going to be some great deals, and that will probably be the lowest prices we're going to see for the year. So I'm giving that thesis time to play out and building cash on the side.
Real quick, I just forgot the super chat. Garcia, we'll spend time on this tomorrow. We'll do a segment on Rivian's improving margins. Thank you for the super chat. So okay. Carlos, this is going to be your expertise. So we'll talk about this one.
Yeah, we can talk about it tomorrow.
All right, everybody.
See you later.
Have a great day. We will see you tomorrow at 7 p.m. Good night, everyone. Bye-bye.